Okay, everybody, good morning. Happy Monday to you. Hope everybody had a great weekend. Nice on-time start for me as usual. Finally snowing in the Baltics here and dragging with the cold, so hopefully that finishes soon. A lot to talk about. A comical display of diplomacy from the White House over the weekend. I'll talk about that in a bit, but for now, I want to give a little update on the markets, pricing, Bitcoin, where we are. Simple little chart here going back to the start of Bitcoin. This is the balance in gold ETFs around the world. So in one way or another, you can call this the most liquid way to hold gold. Now, any gold bug will tell you that not all ETFs are the same. You can have a good time, good luck, maybe going down to the COMEX or I don't know, some depository on Wall Street that's supposed to have some actual gold and try to take physical delivery of gold. If you have, for example, the GLD ETF ticker in your brokerage account, it's not like holding physical gold, but of course you get price exposure. But what I just want to show you is a comparison, because we've started now with Bitcoin ETFs. So, I got this little exhibit now, hard asset ETFs. I'll try to put this in perspective of how big the markets are generally, but you might be surprised, in fact, how small gold's ETF situation is. So gold ETF started about 5 years before this. I'm not going to show it for now, but I'm just tracking the price versus the holdings of the most liquid way to hold gold via your brokerage account worldwide. All right, so this is indeed during the depths of the financial crisis. Gold was roaring to all-time highs in price around here. All right, so ETFs got up to about $156 billion. Notice I have some Bitcoin things on the timeline, halvings. But this is all just gold ETF balances. And we finally started to boom again and get back in higher prices here. All right. Get above the 200 billion level, and now that we're cruising above $4,000 an ounce for many months, gold ETFs worldwide about $515 billion. How does that compare with what's happening in Bitcoin? Well, let's look. Now I could show Grayscale, because that indeed was a sort of a quasi ETF long before the ETFs were approved by the SEC, but I'm not showing that. And just in general, Grayscale shed a lot of Bitcoins, and IBIT took on most of those Bitcoins. So let's just keep it for the ETFs. This includes basically the main ETFs that the United States approved finally after this, 10 years of dithering from when the Winklevi eventually or originally put their application in for an ETF. So how does it compare? Well, it came online just before the halving. Bitcoin price was also rising, and we peaked. Let's zoom in to find the exact peak, right? Somewhere around here. $160 billion worth of Bitcoin. Now with the price sliding, that's down to 110. All right. So 5 to 1. 5 to 1 is our ratio, and this is a pretty good apples to apples, institutional way to look at this. This doesn't include Bitcoin treasury companies, which, by the way, is pretty unique, right? Because gold miners, they don't hold their gold; they sell it as quick as they can, take profits, especially at these prices. Um, there's not a lot of hodlers of gold in the corporate world, but there is of Bitcoin. How that's going to work out in the short to midterm with a lot of debt on that Bitcoin, we're going to see. But this is just ETFs. All right. It's not looking at strategy or anything. Good morning, Yahim Stone from Michigan. Thank you for joining. Quite early for you. Appreciate it. So what I just want to show you, I think, is a takeaway here. Again, I'm trying to convey some calmness. Don't panic buy or panic sell. Not financial advice. I can't tell you how many newsletters I read during this time period from gold bugs that thought gold was going to take over the world. This is the easiest way to own gold. All right, the absolute easiest way. And as any gold bug like Jim Turk will tell you, this is not necessarily very safe. That's why he founded Gold Money, where you can actually hold gold. It's not that huge. All right, 500 billion. Remember, central banks hold about 1 billion ounces of gold, or $4 trillion worth of gold. I can show you that chart as well. So this is 1/10 of that is liquid gold available for investment. A lot of ink has been spread to many a concerned and cautious gold bug over the years. They're having a moment in the sun, for sure. We're going to see how profitable some of these mines are at these prices, especially when these prices go away. Bitcoin doesn't have the supply and demand problem that gold has due to Bitcoin's difficulty adjustment. But then on the Bitcoin side, look, we're growing fast, no doubt. And I'm sure you all have seen the amazing growth of the funds flows, into these main ETFs. But this is the balance of how much Bitcoin they hold at market prices. This is it. So we're 5 times smaller. Remember gold, I think for the first time ever, it did hit 150 billion here. But really, you got to go back to 2020 when it got over 200 billion. So, Bitcoin's certainly catching up quickly, very quickly. But it's going to take a while even to get to parity with gold. Here's IBIT. This is the ounces that they have accumulated. Okay. It's a power curve, as usual. And it makes sense that it's going to be a power curve because there's just no way that they can, accumulate exponentially an asset that is fixed and limited, the only fixed asset in the universe. So ahead of trend here by 20,000 BTC. If they kept this trend up, this is just kind of silly. I don't see this happening, but you go all the way up to 2050. 3 million Bitcoin. This would be a bad thing, right? Bitcoiners do not want so much Bitcoin centralized with one custodian. So we're going to see how this plays out. But that's how it looks. It's power curve. See where we are on price. All right. Down we've gone testing 70s in the 70Ks. A little bit of a run here from over the weekend or late last week. Run is probably a strong word, but finding some support, it seems. Okay, so let's see where we are relative to the OLS. There's the median. I should start here. 60th percentile. So the trend 121K, 60th percentile, 60% of the time. I really need to round this out now instead of just having one decimal. It'd be easier for you, but obviously this is a slightly below trend, 0.99x or something, 98, whatever it is. 97. Let's go to the median. There's the median line. This is 50% of the time. The number 5 there will be hit 50% of the time. 50% below the 5, 50% above the 5. Number is 93,000. We're below that. Let's go to the 4. We didn't hit it. And as I've said many times, if this is to be some sort of a support, I don't know for sure if it will be, but if it will be, it has held all the way back until we broke back out, into the bull. Again, I'm not a TA guy. Generally, the trend is your friend, but I'm not trying to show you crazy things based on some wick from last week's close. This is just daily closes, and we analyze where we are. So here we are, week before Thanksgiving. There'll be a lot of wild political discussions in America next week. But what I'm also curious about is how much Grandma is going to talk about buying the dip with Bitcoin or letting her grandchildren buy the dip, if it is a dip. This is quite an easy stance to take for me, and I've been pretty consistent because I'm not saying for sure it's going to happen. So this is not like a call, but I still find it curious that everybody's ready to rule out something big. I'm not saying it's going to happen. It's not what I'm saying. But what I am saying is we're still pretty close to the trend. As remember, Stephen talked with Stephen Perno on Friday. Very interesting discussion. I would encourage everybody to check that interview. We're still pretty close to the trend. To me, it still seems like a secular bull market. IBIT is above the trend, accumulating coins, although shedding a little bit right now. All right. It certainly seems less likely than, I was telling you all that it, could have been at the start of this year, right? As we were building up here. Seems less likely that we'll get above the 8 or the 9. But why? What's the rush to discount it? That's my question. Everybody's so quick to dismiss sort of the 4-year nature of Bitcoin. I don't think anybody knows for sure that it's dismissed. We know that we have Wall Street adoption, huge in the last 2 years. But, it can still run. It can certainly still run. Let's look at gold. All right. Gold is even more wild as far as a discount. Okay, so my trend, my OLS on gold is Bitcoin gold. 64 ounces. All right, we are a third of that. So Is it 70th even? Yeah, 70th is even. So this is so wild that it's pulling the 7 almost, it's pulling it below the OLS. See how the 70th percentile is not below the OLS in dollar terms? It's right here above it. All right, so 2/3 of the time, roughly in dollar terms, we're at that black line, at or below, I should say. That's just how things go with Bitcoin's growth. Here, it's about to be 70%. I mean, the gold's incredible performance over the last 2 years has now said that this 70% of the time we're below the black line. All right, so a few more percentage points in gold's favor. I'm curious how long this will go, or if this is some sort of a new trend. I have a hard time believing it because, like, we're going to the 50th, the 40th, the 30th, the 20th, the 10th. We're now under the 10th percentile. It's an enormous discount relative to what Bitcoin has done in prior years. 21 ounces of gold per Bitcoin. 90% of the time, over the lifetime of Bitcoin, the price, BTC Gold, has been above this line. It means it's super cheap. If you're looking from the lens of holding gold and thinking about your options. We can't really understand timing here, just like we can't understand timing with this, but we can understand relative risk. And relatively speaking, gold is just super cheap. And what I'm really, really curious, I've said it many times now, is, here we spent a long time beneath the 10th percentile as far as BTC Gold goes, right? 2 months. Under 10 ounces of gold, right? Now, the way Bitcoin's a power curve, right? So the 10th percentile is double. Notice. See the number 1 on this chart? Let's just take it all off so you can see the rest. See exactly what I'm talking about. See number 1, 22 ounces, right? That is double what the actual price was, and basically what the 10th percentile was as well, 3 years ago. So this is where, again, I'm reminded of the "it's okay to be a pig, don't be a hog" metaphor for a lot of investors, specifically gold bugs that might have listened to Peter Schiff too much in the last 15 years. This is a strong regression trend line. And as Stephen Perno said, Bitcoin is not mean reverting, it's trend reverting. It stays very close to the trend. And we're well under it. So we'll have to see. There's no guarantee. I'm just showing you the stats. All right, you can see for yourself how this thing looks. And because of gold's incredible run over the last 2 years, Bitcoin looks really, really cheap. But incredibly, and this is where it's still bullish to Bitcoin for me because I don't see this number coming back. Even the 10th percentile, remember, it's double the worst price 3 years ago. So even if you think that you're going back to 10 ounces of gold, and that would be great, like a great to buy Bitcoin, I wouldn't count on that if I were a gold bug. That would be extremely statistically rare. All right, now I still haven't done it. I've said I'm going to do it. I'm going to have to do, just like I did the opposite direction for the dollar Bitcoin chart or Bitcoin dollar chart. I'm going to have to show you the 10th, 9th, 8th, 7th percentile because we're going to start going there. Right, we're right about the 10th. But getting to this line on all of my charts, if you've been following me long enough, is so nearly impossible because it's the exhaustion of all the probabilities, and we're going that way. So I would, again, if you're a gold bug and you're thinking about how much Bitcoin you can get for your gold, I would caution with this chart. Right? The only time you really touched it was way back here when the trend line itself was forming. Like, this didn't really exist. It looked more like this. And just this was very rounds to 0 ounces. You can't even see the price, but which is very rare to get down to that level. Anything's possible, but you got to look at the relative risk, and we are in major discount zone as far as BTC Gold goes. Another thing, again, to caution, and I need to run percentiles on this. I don't have it. But if you take away the long-term hodls, all right, and you get to within a year, which is here. All right, so these are UTXOs that all the time is a proportion of all UTX, or sorry, not, Bitcoin, not UTXOs. This is Bitcoin. But the age of Bitcoin relative to total Bitcoin at any time. Short-term UTXO, short-term Bitcoin, always increases during pumps. Now, everybody knows Bitcoin's volatility is going down. It's going down. Okay, but this is a, if I may say, a bullish move. All right, when the 6 to 12 month, when all of these UTXOs and the age of them are rising. All right, it's not as bullish as here. It's not as bullish as here. It's not as bullish as here. But it is rising. It's not going down. Let's look at it in UTXO form now. This is actual counting the number of UTXOs relative to the total. Again, looking as a percentage. Similar effect, but a little bit weirder. I would say harder to judge. So let's take the long term off again. So this is the number of UTXOs, and then in that age cohort. This is the number of Bitcoin. Right? This is the number of UTXOs. I'm less confident looking at this as far as like where the price could go. Because here you see a bump, and this was a bump in price. Like a major top, a major bubble, you could say, as well as here. All right, this was the first top. There's two tops in 20. I know I need the price here, but I'm just going to tell you the first top in 2013, and then the second top was here. Actually, you didn't see it. You more see it in the 0 and the 1. But then here, you have a lot of UTXOs changing or increasing during the ETF boom, and then now going way down. So it's a little bit weird. It's like the 1 to 2 years. And 2 to 3. Good morning, Dr. Gonzo. Like to hear it. I like to hear it. I mean, if you're a gold holder, it's hard to say that Bitcoin doesn't look more appealing in price. I said at the Bitcoin Amsterdam when my old co-host Fernando and I interviewed Mark Faber about 4 years ago. He was so angry at how much liquidity was going into crypto, as he said. And I use the word crypto, not Bitcoin, but it's clearly the other way around right now. Liquidity is finding its way to gold, and we have this trade. We have this. I mean, they're both risk-off assets, at least they should be. They're both hard money assets, but Bitcoin is super cheap. All right. Pull up a couple other things. Remind you that this is just, to me, suggests still bullishness, but again, I could be wrong, but this is the percent that miners get each day, either from the block reward or from fees. So when it's white, they're getting more from fees. When it's green, it's just block reward. It's inflation or issuance is the better word for Bitcoin. All right, so every time there's a pump, except here, actually, fees were so small, it didn't really matter. But from 2017, every time there's a pump, you'll start to see that congestion. And we really haven't seen it since the halving. So people say, well, that's because of layer twos, or that's because of all TradFi coming in. Still have a hard time believing that. I mean, nothing is happening on chain as far as fees go. This was the very first ordinals debacle. Right there. But then if you take this number and do a 30-day, all right, to roll it, becomes a little bit clearer. Okay. Takes out some of the noise. All right, and again, all the noise happened from the halving, from the ETF approval. All was here. Nothing, just like all quiet on the Bitcoin front. Same chart, but looked at differently now. This is just totaling the fees in dollar terms. All right. But it's fees plus issuance. So unlike that other chart, we can clearly see it tracks the boom in price. Because higher dollar price, get you more daily revenue, of course. Here's the halving. You see revenue gets cut in half, literally, for miners. And we're falling down here. But let's look again here, see what we can see. This is going to give us a different view. All right, so now I'm smoothing the revenue over 30 days. All right, so here they made $1.2 billion over 30 days, and it was a clear peak. Also here, they made 100 million. Peak was clear, although it was a slow decline. Here we had this double peak. $1.7 billion, $1.8 billion over 30 days. And then again, we have not even reached this 30-day peak from the halving, which was a mad halving with all this inscription stuff and BRC20 still. People were trying to get these ordinals inscriptions into the first block of the halving. Paid miners a lot of money. So what you see here, this 30-day revenue, is mostly coins. It's just not fees. Of course, it's going down as price goes down. But it doesn't look like bubbly. Like here is bubbly, right? Here's bubbly. And here's. It tracks the price, of course. And then you extend the frequency out further to yearly. Now, yearly's not going to time the tops. It's too late. But still. All right, so this thing topped in January of 2022. All the action was in 2021. And then you see just the thing gets sawed in half or cut off, basically. This is yearly revenue now. And we are at 18 billion, 17.2 billion, which is, again, like just above 2022. It does seem like it's a little bit cresting here. It's harder for me to believe that this doesn't just keep growing as it does, right? I mean, it's going to grow on the power curve. Price, that is, right? So as price goes on the power curve, you may have... Actually, what does this look like on log? These have nothing to do with each other, by the way, if you're wondering, like, that it touches it there. This is different axes. Again, it just looks normal. It doesn't look, certainly not a big bump, just more normal. So to me, this is actually a strong chart for the people that say the 4-year cycle is done. This is a strong chart for that. That it's just we're going to grow more normally as far as miner revenue goes. Yeah, I haven't followed it as much, to be honest. Morning, Kurt. Yeah, that is the thesis. I mean, that's... where's my... So if we literally go back to trend, then it's even a triple. It's basically takes us to the 250 number. So trend in dollars is 125 by the end of the year, 125. If we get back to trend here and gold stays roughly the same price, $4,000, that means $250,000 Bitcoin. Which again, to me, this is all like totally reasonable that could happen. I just don't know the timing. You know, I'm not an Elliott wave impulse 1, 2, 3, 4, whatever all these wacky things are. I just think of Robert Prechter every time I think of Elliott wave and how wrong he was on deflation for like 50 years. Not 50 years, but... here's another one I still haven't updated, but I want to get updated, and I think this will be fun to see. Let's look on the 30-day. I want to get this down to the daily, and I want to include copper and silver. I don't have it, but it's fun. It's fun. All right, so I showed you that miner revenue, right? So this is on 30 days. 30 days, okay? So over 30 days, $1.6 billion is what Bitcoin miners make if they sold every coin that they mined. And they don't, as we know, because they expect price appreciation, which could even lead to price appreciation, but they don't. Gold miners do sell everything they mine, generally. Here's what they make every 30 days. And with this crazy price, they're making $38 billion a month. It's like never been a better time to be a gold miner. They're just loving life. But again, you compare that to oil, it's like not even another day on the oil rig. Oil is a massive industry. It can also be super volatile. People say Bitcoin's volatile. Look what happened during our silly season. So again, I'm just trying to put things in perspective. We'll stay calm. What do you guys think? I've talked too much. Everybody thinks the cycles are over. I know my call is not like very bold, but I'm just saying let's hold off on saying this. It's still not going to be a boom here. If we get through January, then I'll admit it. These guys want a cheaper price as they buy more. And sell more to their clients. And, you know, for perspective, we still have, like, this thing's just going to take time to mature. It's just not, hyper Bitcoinization is just not, it doesn't work. The math doesn't work. Yeah. I mean, that's the logic of the 4-year cycle, right? The only time we pierced the previous low was in the last cycle, right? When we went below 20. It was here. So if the prior cycle high, which was 20K roughly, represents the absolute low of the next bear, then we broke it here for the first time. We did not do that any other time. We did do it here after SBF admitted he had no Bitcoin at all, although he did make an AI investment. So under that logic, this is the support now. And I see two problems with this. Firstly, we haven't blown off. Although you could argue like the top was, we prematurely got to all that action with the ETFs. Maybe. I guess it's 1 point really. I think I was going to say 2 points, but if we haven't really had the blow off, it's hard for me to expect even immediately that we hit 60. And another thing, which I really think is crucial, is all these people like on TradingView. Again, I'm not trying to denigrate everybody here, but I know people make money trading short term. It's just not me. they're doing charts in exponential space, and Bitcoin doesn't move that way. Over the medium to the long term, it moves in log space or power space. So it's just totally different. And I really think that's throwing off a lot of analysts, even Wall Street analysts. Yeah. Yeah, it'd be good to chart that somehow. I should probably do that. But I mean, that math could still change, right? If we get above this. It's 242. I can't do it in my head. I mean, just roughly, it's 20. It's 20x here, right? Super rough. It's 3x here. And now it might have been 2x. But again, that's the power curve will show different. A little bit different growth than that thinking of just every 4 years. What's the top? So like here, well, let's really go here. Even though this is not the real top, I know the real top was here, but at least on the 4 year. Look at the 90th. So the regression 25, but the 90th 60, 60 to 250. All right, so 4. And then here, the 90th was 7. Let's just call it 7 to 60. It was 9. And here, the 90th was 350. Let's call it 400. To 7. Not quite 20. Wait, what did I just say? I'm too caffeinated up. Let me just do it very quickly on this. It's 400, right? 17 and a half. $17.5 to $8.5 to 4. That's what I need to show you. That would be better. On the 9s. I think that's more interesting. It's a good question, Kurt. When you start to do these bands, you would see them get really wacky. You see them get far apart. and not make a lot of sense. And I surprised myself, right? Because people were asking about this the other week, or people surprised me, I should say, by asking about the other currencies. So if we look at Turkey, how they were looking, and if we look at Japan, no, not Japan, but Nigeria, which is not black market rates, which would be a little bit better, but still, you can still see that it's a power curve, even with bad currencies. Shit, hold on. Hold on. Why is that not working out? Sorry, 1 second. I hate giving you guys this dead time, but come on. One second. I need to refactor a lot of code. It's taking too long. It's coming in just a couple seconds. All right. Here's Turkey. Log. Not a straight line still. Take off a lot of the noise. You would think, right? It might look broken or something, but still 97% R squared is the Turkish lira, and it's like on the very high end, but it's still working in power. So if this started to break, even for a currency like this, and I'm not saying that it can't for a currency like this, but I think you need like a hyperinflation to like really break it. But Turkey is inflating a lot, right? Their currency. Right? I mean, here they were 500,000 lira per Bitcoin, 600,000. 4 years later, 3.4 million. So if you think it in dollar terms, obviously it's quite different as far as the magnitude from 4 years ago. In any event, you would start to see these percentiles get really wacky, like way far apart. They would try to work, but they would look really wacky. And they don't look wacky yet, which I have to admit surprised me. I'll show you the Naira. So, biggest currency in Africa, actually. It's right here. Still take off all this stuff. It's still a power curve. Even though with these currencies, you're riding on the top end, not at or under trend. And this is actually worse. Like if this is the official central bank rate, I know if you go on, if you go on TradingView and find a Naira market, it would be, let's even see what it is. I was curious. I don't see BTC NGN on TradingView actually. Anybody else? So it still works, is the point. Still works. Hello, Erickson. Thank you for that. From what I've seen, it hasn't been too crazy. But that's something I should show more, especially the balances. I don't have any charts created on the balance yet, but I'll get there. I'll get there. I have seen some tweets, maybe you guys have seen it, where it seems that larger holders are even, becoming larger. Basically, the number of small holders is decreasing, number of large holders is increasing. Another slight interesting one here, I tweeted this. All right, is you can find this discrepancy as well, just finding the stable coin rate, but I thought it was more interesting looking like backing into from the Bitcoin rate. So here's the central bank rate of Nigeria. MLA has done a better job of, this is like when they went full dollarized basically. So banks are allowed to hold dollars. I actually talked to some Argentinians, I never know, when I was in Torino last week. But you could only hold dollar cash mostly before, but now you can hold. He's dollarizing the economy, so he's losing the black market rate has pretty much gone away. But if you look here, so here's Blue Dollar. This is where you get the black market rate, and there's a good website, Blue Dollar, where they track it. But here's backing into the unofficial rate, and it's take a Bitcoin spot price, and I used BitSo, it's a Mexican exchange, but take the BitSo rate for BTC ARS, and then divide that by the international rate, or everybody knows the liquid rate, which, as I said here, was 83,975, and then you will get a number that's going to be closer to the black market rate than not. And this is actually, slightly higher theoretically. It's hard to say this is too meaningful at the moment, but Bitcoin will show you immediately if people are losing trust in the official rate with currencies like the peso, which trade in a band. So that's just interesting as well. But yeah, as far as the distribution of wallet coins, like the number of coins in different wallets and addresses, I don't have it at the moment, but James for sure has it on his site. I have some good things coming. Finally getting better pipeline with a lot of different APIs. You guys know I do the money supply stuff. You know, I really would like to get something where everybody could sign in and then you can see like a load of these charts and you don't have to watch my videos. It's just, you know, you just got to bear with me with a one-man band at the moment. This is the main chart that I don't think people are paying attention to. Not this one with Millet, but another one I'll show you. Is this one. So foreigners are falling, right, as far as holding treasuries. The Fed has also been falling. And again, I'm not cheerleading their actions, and I'm not even hoping for crises to make Bitcoin do well, but there's plenty of room for them to go back up. Right? This is a proportion of what the Federal Reserve owns of U.S. debt versus total U.S. debt. And, you know, whatever happens, they're going to keep demand for treasuries elevated. Anybody else want to see other charts? As you guys know, over in Riga here, we're constantly tracking the war in Ukraine and also the sort of debacle that some may say U.S. diplomacy is putting on this situation. I just want to say a couple words on this. This is a good one. Suggests the Dmitriev-Witkoff proposal should henceforth be called the Dim-Wit Plan. But I'll show you all what's sort of really happening here. People should not forget, really should not forget, that, and I talked about this as well, but Ian Bremmer, who has a lot more followers than me, also showed this. Let's not forget that on September 23rd, Trump tweeted or did his Truth Social, where he literally said, I think Ukraine, after getting to know and fully understand the Ukraine-Russia military and economic situation, I think Russia's a paper tiger, yada, yada, yada. And I think Ukraine, with the support of the European Union, is in a position to fight and win all of Ukraine back in its original form. Now, for those of you who haven't followed this so closely, so this peace plan that was leaked last week is nothing more than a Russian wish list, as it's been called. But here was some initial thoughts on November 22nd from Christo Grozev, an amazing journalist from Bellingcat. Happened to see an early version of the peace plan about 6 months ago. It was a purely Russian concept. It was nearly identical to what we see today. Certainly the 50-50 Russian assets plus EU investment in Ukraine reconstruction was there. However, two items are glaringly missing. First, a proposal that U.S. investors bail post-war Russia out of a pending cash and investment strap recession, like in the 90s, which, by the way, is supposed to be what Russia's doesn't want. This was meant as an inducement for Trump, whether as a legitimate U.S. sweetener or as one for friends and family. That wasn't explicit, so that was in the old plan. The second offering was a new Russia-U.S. alliance against China. A lot of the Christian alliance demagoguery was included under that item. I am absolutely certain that this is a Russian, not a jointly developed proposal. I also cannot imagine the Russians didn't include the first of the two extra items. I can see, however, how that wouldn't be part of the publicly leaked plan. On item 2, can't be sure if Russia dared to include the anti-China offer. Again, if it did, it wouldn't be public. All right, so all in all, it might be a 30-point plan. I'll talk about the plan in a second, but I just want to show a couple things. By the way, if you don't follow Michael Weiss, I highly recommend. All right, from The Insider. Just an amazing journalist, actually, cut his teeth in the Middle East. Actually talks to people, writes articles that are based in fact. So here, Ukraine's ambassador to the U.S. says it's a wish list. She's using Rubio's term here. He lit a fire that isn't going out. Try those certain parties might to put it out. This is a European counterproposal. I'll talk about that in a second. Merz, Chancellor of Germany, is not happy. And by now he probably knows Vance is the lead on this, which will make him even less happy. Here's what he said. Stress that Europe holds leverage over key elements of the plan. So the Russian assets, which are based in Brussels, cannot be paid out by the Americans. That is unthinkable, he said. So if this plan comes into reality, the support of Europeans is definitely needed. But of course, Trump says Zelensky needs to sign by Thanksgiving, and this is an American plan. But he said that after just following on the fact that Dmitriev of the dimwit duo leaked it. Same deal. Trump's trying to unfreeze assets held in Europe. And then, of course, if you didn't see this over the weekend, this was the senators that said they talked to Rubio and they asked Rubio if they could go public with it. He said yes, that this was indeed a Russian plan. It was not an American plan. So we go in just a few months from here. I think Ukraine, with the support of the European Union, is in a position to fight and win all of Ukraine and win back its original form, calling Russia a paper tiger, to just vomiting back and forth to this dimwit plan that's leaked. Let me show you a couple other things, again, being someone on the border of this madness. This is the actual text, all right? Just to see how Gemini does, but didn't check this, but I'm not going to go through every point, but just want to show you some crazy things. Ukraine's sovereignty would be confirmed. Now, this one, we'll come back to Ukraine's sovereignty should be confirmed. A U.S. mediated dialogue between Russia and NATO would address security and de-escalation. The U.S. is in NATO. The U.S. is a founding member of NATO. So in this Russian leaked plan, they're trying to make it seem that the U.S. is somehow not in NATO. It's very important, by the way, for countries like the Baltics. Reliable security guarantees, right. The Ukrainian armed forces will be limited to 600,000 personnel. This is getting a lot of traction. The only time these sorts of military personnel limitations have been put on is when countries started wars and also lost the wars they started, notably Germany in both World War I and II. This does not mean Ukraine's sovereignty would be confirmed if they have to limit their personnel. All the stuff about NATO, we'll come back to it, is just joke stuff. European fighter jets would be stationed in Poland. Notice how it doesn't say U.S. fighter jets. Again, this is a Russian document. What did I want to talk about? Okay, so here it says non-nuclear. It doesn't actually have the actual text. It should. It literally says in the original, unless it's a different point that I'm forgetting, it says Ukraine should be non-nuclear according to the 1994 Budapest Memorandum on non-nuclear proliferation. This is the same Budapest Memorandum that in the Russian version said Garantia. It said Ukraine has a guarantee from the US, the UK, and Russia not to invade its territory. That is the Russian language version of the 1994 Budapest Memorandum said guarantee. Now, in the English version, which made a lot of people crazy, and Ukraine's already brought this up since 2014, it says assurance. So you have to figure that out for yourselves, how that's been negotiated. But in the Russian version, the word is garantia in the 1994 Budapest Memorandum. So it's quite rich that Ukraine can't go for nukes due to the 1994 Budapest Memorandum, which in Russian says garantia, that Russia gives a garantia, a guarantee, it's a Russian word, in Russian, that they will not invade Ukraine. The rest is mostly, Witkoff trying to be a real estate developer, talking about how the U.S. is going to have, 50% of the profits and all this other stuff. But these are the main points. That there are almost everything is absurd in here. But the main thing is, if Ukraine is a sovereign country, if the United States is going to say Ukraine's a sovereign country, then this is a non-starter for Ukraine. And I haven't gone all through it, but the European counterproposal, again from Weiss, there's going to be a NATO-like Article 5 agreement for them. Good morning, Moon Guy. Yes, they do. $2 trillion. Good morning, Ken. It doesn't seem like they are. Trump's zigzagging out of every agreement. The irony is Marco Rubio in one of the congressional sessions, I think it was the congressional session right after Trump leaving office in 2020. So it was like the first congressional, the 2021-2022 session, put a rider in that says Congress must authorize any action the executive branch takes on NATO membership. It'd be quite ironic. I'm actually waiting for the moment for Trump to make Rubio make the announcement that the U.S. wants to leave NATO. That would be the most rich of all of it. Just to show that the Trump administration has no, respect for Europe or whatever. But again, my position, I have my European hat on, is clearly that if Europe drops the ball on this, there's just no excuse. I mean, I don't know how many times we have to hear it from everybody that the U.S. is not going to do anything. Gabrielis Landsbergis, former FM, foreign minister of Lithuania, says it the right way. This is the end of the end. We have been told repeatedly and unambiguously that Ukraine's security and therefore Europe's security will be Europe's responsibility, and now it is entirely. If you're a European leader, asking your team to book you on the next flight to Washington to talk to daddy. This is just what I hate so much is like Rutte's words, right? And those Mark Rutte's words calling Trump daddy. Please don't. This is all about European sovereignty now. It's only about Europe. You can't zigzag from literally on September 23rd saying, after getting to know and fully understand the Ukraine Russia military economic situation, Ukraine can take back all of its territory, to 2 months later saying, you got to sign this Russian peace plan by Thanksgiving. It's just Joker stuff. I mean, there's no way. So I know they met in Geneva yesterday and yada yada. You're going to see some news, but there's no way neither Ukraine nor the Europeans are going to settle on any of these points. One more thing. People like to talk about the good old days of Europe or the U.S., especially the hard right people now. They're saying, let's go back to the good old days of where the U.S. was strong and Russia was strong, and we trade. There was no trade with the Soviet Union, by the way, but and we trade, and it's all going to be very nice and easy. I don't really know what good old days you want to go back to, because this is the U.S. troop numbers in Europe during the Cold War. You have 400,000 troops in Europe to keep the peace. America's not going to do that again, and it's not going to magically happen when you have an insane dictatorship where 2 in 5 people don't have a toilet, trying to tear down a former Soviet Union country's sovereignty. So this is the good old days. Is anybody saying we're going to go back to the good old days of American troops in Europe? So it's all up to the Europeans. There's going to be no Thanksgiving truce here. So that's my thought on this madness. There's just a little meme here. I never would have thought that this would be the situation, right? I'm speaking as both an American as a European citizen. It's really wild. And I don't know if it's the Epstein files. I don't know if he just needs a distraction. But how can anyone take this administration seriously anymore? Nothing means anything. What security guarantee would Ukraine get from the United States that would mean anything? All that they know is that Russia is continuing to rape, torture, and invade them. So it's all up to Europe. Yeah, I actually agree with you too, Kurt. Unironically, unambiguously, I agree with this point. I just wish that Trump would say it clearly and Europe would say it clearly that we're not seeing eye to eye on this, right? This is never coming back. Like there are no good old days. There's no coming back to this. So I don't see an end to this unless Russia's stopped by Europeans. All right. Anybody else want to look at some economic stuff? We've done the geopolitical. We got power curves still holding. Dollar gold looks very interesting. And by the way, you were right, Kurt, to talk about the lack of importance of the halving. But I need to show those multiples or the decrease in that 4-year volatility. Not just on the trend, but I think on all the bands. That would be interesting to see. I may be the last person in the Bitcoin space to think that there's still a chance, but I do think there's still a chance. Yeah. I'm actually less convinced of that argument compared to, if, again, I've followed this from a different lens over here, and it's not that I, especially being an American and European, it's not that I'm requesting even the U.S. to send troops or whatever, but the deterrence of NATO, I think, is real and important, and it's just an inevitable fact of the peace of the Cold War, and Eastern Europe was left out of that. So that's the tension that is still not solved today, and Ukrainians are paying for this with blood. I also think that whatever happens in China, as Paul Warburg, who's a great YouTuber on Ukraine, said, China's learning a lot right now. It's possible that China, like everybody's looking at China as the huge juggernaut. We know that they're going to have democratic problems, or not democratic problems too, but demographic problems. It's possible that they may be learning that their kit, who's seen Chinese kit in action, but they may be second guessing how effective an invasion of Taiwan could be, simply due to the fact that the Russians have been so inept in their invasion. So deterrence is still an extremely important factor. And, defending in the world, I understand this view. I understand as a center-right American, the Iraq War was nothing less than a disaster for many people, and it was the war that I grew up with. I had many friends that fought there. Most quite negative after it was all over, as many of the people on the right now. But there's just nothing good coming out of whatever Russia's trying to do in Ukraine. So that's where the big disconnect is. The U.S. can still deter. It can still project power. Trump's already out. We know that for sure. Trump's out of projecting power, but you lose extreme credibility to say, after getting to know and fully understand the Ukraine-Russia military situation, already 9 months into your term, like, all of us that support Ukraine unequivocally could have told him this, that Russia's a paper tiger, Russia's a shithole. 2 in 5 people don't have a toilet. And it's ruled by a dictator. There's no private property, no courts. But now it's Europe. It's going to have to be Europe. I don't think anybody can lie to themselves and say it's like the US or daddy is going to come and help. So let's see if Europeans are finally up to the task. All right, guys, we did geopolitical, we did monetary. Still doing this little holiday manual order situation. I am again not Amazon Prime same day delivery, but if you want any of these, whether it's stuff with my logo or just the general, the dollar, the Zimbabwe, old man yells at Bitcoin, probably nothing. We got plenty of other templates. Send me an email. Can do hoodies as well. And regular sweatshirts. Send me an email. info@porkopolis.io. Roughly, it's going to be easier to go to Europe, but we can still go to the US, of course. 100 euros is what we're looking at for 3 shirts or a shirt and a hoodie, or a shirt and a sweatshirt. It's going to be easier on bulk or like a bundle type thing. So let me know. This is all run by my buddy, who is also does the merch for the Hodl Hodl conference. And they got a lot of good stuff there. Sarah Payne is wonderful. I really think she's wonderful. Super smart. I mean, we're going to see if there's any rule of law in the democratic world or not, right? If there's no rule of law in Russia and they're just going to invade neighbors, then we have to go back to this. But it's not going to be America. It's going to be European troops. Boris Johnson, who I quite like, actually, said for months now we don't need to wait for Russia's permission to protect the territorial integrity of Ukraine. Russia's violated every agreement that they've possibly signed. It's unbelievably laughable to think that they now want to enforce the Budapest Memorandum according to this point 14. Which was the same Budapest Memorandum that they invaded Ukraine with the word garantia in Russian, in the Russian language of that text. So it's a big deal. I hope Europe is up for the challenge. We're going to have to see. Thank you for the comments there, though. It's thoughtful. All right, guys. Getting long for me today. Still got to recover. Hopefully soon I will. I've been working out in a bit. Got other work to do. Send me an email if you're interested in any of these. Bundles are going to be the best way to do it. And eventually it'll get on my website. Eventually. But now we're doing a sort of manual order system. If you're interested. All right. Having said that, I'm going to sign off. Thank you all for watching, and I will catch you tomorrow.